Good afternoon, everyone. Welcome to Crypto. I'm a former asset manager myself. I used to work in finance. And we are going to talk today about return. Why return? I'm going to go into the details a little bit afterwards, but it's very important. If we want to get this mass adoption, at some point we need to get a return on our cryptos. You have to bear in mind that in the finance industry, since the Lehman Brothers bankruptcy, there has been several revolutions going on. First, you have had, let's say, a big transfer of asset managed from, let's say, discretionary trading to quantitative trading and to index trading. The second revolution that the asset management world has lived through is basically the emergence of this cryptocurrency. They don't really know what to do with them at the moment, but I'm sure they will figure out at some point, because there is something definitely that is going on and that we can see, let's say, in the very high rise of the market caps for these cryptocurrencies. I started my career as discretionary traders, first trading some stocks on my own, losing some money, like most of us when we start trading. So I can share your pain to a certain extent. And then once I decided that it would be my job, and it became my job at BNP Paribas. I used to run a 4 billion euro asset management team. I decided that I needed to be more professional about it. So I started reading, which is always very good because you gain experience without, let's say, losing the money, trading yourself and learning by yourself. Then I was lucky to meet a guy that helped me start to develop my skills in quantitative trading. And it's not something that is very easy to do at the beginning if you don't have experience in that. Then how I came to this cryptocurrency world. Very basic. I think because of what is behind that, the blockchain, we have no choice but to embrace this new revolution, because the usage of the blockchain itself would be much widespread in corporates or in our daily lives. Behind the blockchain, you have the cryptocurrency, and they are associated. Now, at Napoleon X, we have developed a solution that will enable people holding cryptos to get a sustainable return. Why do we need a sustainable return? If we project ourselves in the future, where cryptos will be, let's say, a currency that will be used on a daily basis, like, for example, to buy some goods or services, then you will need to have this money stored somewhere, and you don't want to wait and have the inflation beating on your crypto, and you want to earn something on your cryptos. Now, at Napoleon X, we have developed a solution that will enable people holding cryptos to get regular performance over their money. Now, as I was saying at the beginning, the quantitative asset management part has dramatically increased over time. This is just an example of what you can find looking at the smart beta asset management. As of today, if you're in the cryptocurrency, you have two choices to invest your money. You can either stay in cryptos and flip from one crypto to another, and you have some very good hedge funds that are doing that at the moment, but it's quite limited in terms of scale because of the liquidity of the underlying assets. On the other hand, you have the possibility to invest in private equity type of investment, which is ICOs, and this is very interesting for the future, but it's quite risky because you don't know what this company will become in the future. You're relying on the quality of the team and on the business concept that is behind it. If you think about it, in 2000 there was this internet bubble or internet revolution, and we nowadays are really experiencing all the internet, I would say, positives, but if you look at the companies that were there in 2000, you have very few of them right now. But still, it's still very important in our daily lives. Now, this revolution, this quant revolution, we at Napoleon X want to bring it directly to the crypto investors. We don't want to wait to go through all the, let's say, investment cycles, and we want to bring this right back to them. If we take an analogy with the phones, in China or in Africa, at the moment, they are all using mobile phones. They didn't they have not gone through the landline technology. They went right through the mobile phone technology. And with the quantitative management, that's exactly what we are trying to promote at Napoleon X. We want to go for the trading of the future. Now the bots, these are basically our new golden boys. And you know why? Simple, because they are providing more return and more sustainable return. How do they do that? 3 reasons. The first one is they don't trade on emotions. And we all know that emotions is not a very good driver when you're taking investment decision. Second, they are able to analyze a much wider amount of information. And we are living in a world full of data. And third, they do this very quickly. So that's really the new golden boys of our area. Just one illustration for that. Goldman Sachs, you know, one of these most, I would say, famous investment bank in the US. By the way, when you shake, their hands or a Goldman investment banker hand, you have to count your fingers just afterwards. Goldman Sachs, they used to run a trading desk with more than 600 people in the US. A few months ago, there was a news article saying that this very same team has shrunk down to 2 people. So that's just the power of automatizing things in the asset management world. So the good news for you is that at Napoleon X, we have developed a solution, and we have not developed one, let's say, boats, but we have developed a full library of boats, and they're working. Now you can see this on these 2 graphs. So you have to bear in mind that we are coming from the traditional asset management world. We were specializing in low-frequency trading for highly liquid markets, and for a very simple reason, which is scale. In this business, the bigger you manage, the more money you make. Now, the first example is a strategy that we have developed on the S&P 500 that is combining 2 strategies, and that has only 2 trades per month maximum. And you can see that over the years, if you put some kind of leverage, because the strategy is fairly stable, so you can enhance the return by improving it by some leverage, we can get a 51% return over more than 20 years. Now, what we are proposing today is the tokenization of these strategies. So not of the real assets underpinning this, that we are using for the strategy, but the strategies themselves. Because we think that from a risk-reward point of view, it makes more sense. Now, we have used as well our techniques on crypto assets, and we've gone for the most liquid one, which is Bitcoin. Why? Once again, we have in mind scalability. So it's a simple trend-following model that I have developed here that does, on average, 12 trades per year. So not much. And as you can see on the graph, we've been able to beat the simple buy and hold Bitcoins that has generated 366% since launch on an annual basis. And we've been able to get 473%. So roughly more than 100% more than that. If you want to get more info on our strategies, we have developed and we have written a black paper that is available on our website, where we present the first 10 strategies that we have selected amongst a much wider library of bots that I talked about before. Now, the proof of performance is a very important concept. When it comes down to investing, the number one asset that you need is trust. In the real world, the trust has been built using different mechanisms. First, you have several entities that are providing trust to investors. You can think of governments, central banks, commercial banks, custodian if you're in the asset management world. What is very nice about blockchain is that this trust feature is embedded in the technology itself. Because we have a distributed ledger, trust is there. And we've just used this feature in order to launch an index publisher that will host all the strategies that we have shown you before, so that you will not trust me, let's say, for my words on the graph I'm showing you. You will be able to go on the blockchain yourself and see the result for yourself. Now, what are we proposing in our raising? Yes. We are proposing two things to remember. 25% is the performance fee that will be perceived by the funds that we're going to launch in the second stage. And 85% of this performance fee will go to the Napoleon X investment order. Now the team, very quickly, it's a very experienced team. We have more than 50 years of experience between the three founders, engineering background, financial background, trading background. Timeline, I'm going to skip it. And just to finish on our ICO, it will start mid-November. There is a bonus program that is available for the one joining early, and you can get it if you dial the magical URL, bonus.napoleonx.ay, and you can join our Napoleon X army. Thank you very much.